Rokos Capital Management is asking investors to agree to a gradual increase in fixed management fees to 2.75% over the next 3 years. For more, we are joined by Sridhar Natarajan, Bloomberg's chief Wall Street correspondent. And, Matt made this good point in the commercial break earlier. This is getting closer to 3 and 30, which is a number you see among big multi-strat hedge funds, perhaps.
They're going to take 25% now of profits, so.
If you're counting pass-through fees, though, if you're not, then this is what you have to do, isn't it?
And that's the dynamic here, right? For the last few years, we've been talking about this diversion in the hedge fund industry. We talk about the multi-strat hedge funds and the others. Now, the only people who can compete with the Millenniums and the Citadels of the world are some of the biggest hedge funds. And if you're one of the biggest hedge funds in the world and you've had good performance, like Rokos has had, if you look at the last 3 years, that's 31%, 9%, 50%, already up 12% through the first half of the year. This is the time where you get to tell your investors, maybe you should be paying me more in management fees so that I can invest in getting the best talent, because you are getting sick and tired of seeing the Citadels and the Millenniums offer these crazy packages to all the top talent there, and you will be left on the losing end of the bargain. So that's a reason they're throwing out to investors as to why they have to increase the fees here.
Did you say 50%?
50% performance, not fees.
50% performance is fantastic. That's like almost
2022 was a good year.
Levels. How much are they having to pay for compute, for AI? Because we were talking with Reflexivity last week, and they were saying, like, pretty soon junior analysts are going to be replaced by this technology.
Look, as part of their stated reasons, they do say they have to invest in top talent, and they also want to invest in research and technology. So that makes sense. But I will also point to the reason, and this is perhaps not something you would advertise to your investors, but it is worth remembering that Rokos is about $22 billion in size. And for a hedge fund to continue to perform well and to continue to bring in the big returns, there also has to be an element of flexibility in the ability to stay nimble. And that's hard to do when you grow too big. That could also be a reason to test the waters and see if there are investors who are willing to accept the higher fees, and if there are any redemptions, they may be willing to take that.